4.2 million ounces. Gone. In 24 hours. That's not a withdrawal. That's not business as usual. That's a bank run. And it's happening right now to the silver market while you're watching this video. On January 16th, 2026, something happened at the COMEX that I've never seen before in my entire time covering precious metals. The vaults reported withdrawals so massive, so coordinated that if you blink, you might miss what could be the beginning of the biggest silver squeeze in modern history. JP Morgan pulled 1.3 million ounces. Asahi pulled 1.4 million ounces. C&T pulled 1.2 million ounces. And that's just the beginning. When you add up all the numbers, over 4 million ounces of physical silver vanished from COMEX depositories in a single day. But here's what should terrify you. Registered silver, the actual metal that's available for delivery to investors who want to take physical possession, that dropped by 2.5 million ounces. We're now sitting at just 120 million ounces of registered silver in the entire COMEX system. 120 million sounds like a lot, right? Wait until I show you why it's actually nothing. And March delivery month is coming. The month when investors can demand physical delivery of their contracts. The month when the COMEX has to actually produce the metal. Welcome to The Hidden Economy, where we expose what mainstream media won't tell you about money, markets, and the forces moving trillions of dollars behind the scenes. I'm here to break down complex financial events into simple terms so you can understand what's really happening to your wealth. Hit that like and subscribe button. We're about to dive deep into data that Wall Street doesn't want you to see. Let me paint you a picture of what's actually happening here, because this isn't just about numbers on a screen. This is about physical metal, real silver bars, the kind you can hold in your hand. And they're leaving the vaults at a pace that suggests something very serious is unfolding. Think about it this way. Imagine you have a bank in your town. Every day, maybe 10 people come in and withdraw some money, normal activity. But then one day, 100 people show up demanding their money all at once. That's a bank run. That's panic. That's the point where confidence breaks down. Now scale that up to the COMEX. The Chicago Mercantile Exchange silver depositories hold physical silver for major financial institutions, refiners, and investors. These aren't random people walking in off the street. These are some of the biggest players in the precious metals market. And on January 16th, they all decided they wanted their silver out. Now, let me walk you through exactly what the data shows, because I have the official COMEX depository statistics right here, and the numbers are absolutely staggering. Asahi Depository, one of the largest silver vaults in the COMEX system. Previous total, 36 million ounces. Withdrawn, 1,427,000 ounces. But here's the critical part. They moved 180,000 ounces out of registered status. Registered is the silver that's actually available for delivery. Once it moves out of registered, it's essentially off limits for COMEX contract delivery. Their adjustment column shows negative 180,000 ounces. That silver is gone from the delivery pool. C&T Depository. Previous total, 38 million ounces. Withdrawn, 1,200,000 ounces in a single day, and 608,000 ounces moved out of registered. Think about that. Over half of what they withdrew was silver that could have been delivered to contract holders. Now it's gone. JP Morgan Chase, the big one, previous total, 180 million ounces. Withdrawn, 1,290,000 ounces, 82,000 ounces out of registered. Now, JP Morgan is particularly interesting here, and I'm going to come back to them in a minute, because their role in the silver market is absolutely critical to understanding what's happening. Loomis International withdrew 308,000 ounces, 48,000 out of registered. Manfred Tordella and Brooks, their adjustment column shows negative 784,000 ounces moved out of registered status. When you add it all up, the total eligible silver, that's the category that includes all the silver that could potentially be converted to registered status, that dropped by 4,225,000 ounces. The combined total across all COMEX vaults went from 433 million ounces down to 429 million ounces. But here's what you need to understand. The real story isn't in the total number. The real story is in registered silver. Registered silver dropped from 123 million ounces to 120.6 million ounces. That's a loss of 2.57 million ounces of deliverable silver in one day. Now let me put this in perspective, because numbers this big can be hard to wrap your head around. 2.57 million ounces of silver. That's enough silver to produce over 100,000 electric vehicles. Every EV uses about half an ounce to 1 ounce of silver in its electrical systems, contacts, and components. So we're talking about the amount of silver that entire auto factories need for months of production, and it just disappeared from the available pool in 24 hours. Or think about it this way. The average solar panel uses about 20 grams of silver, which is about 0.64 ounces. 2.57 million ounces could produce over 4 million solar panels. That's enough to power roughly 800,000 homes. Gone from the COMEX registered category in a single trading day. But why does registered versus eligible matter so much? Let me explain this because it's absolutely crucial to understanding why this could trigger a massive price spike. When you buy a COMEX silver futures contract, you're buying a promise for 5,000 ounces of silver. Most traders just trade the paper contract back and forth. They never actually want the physical metal, they're just speculating on price movements. But some investors, they want the real thing. They want to take delivery. And when they stand for delivery, the COMEX has to provide them with actual physical silver from the registered category. Eligible silver is silver that meets COMEX standards and is stored in approved vaults, but it's not currently available for delivery. The owner of that silver hasn't designated it for delivery against COMEX contracts. It's like having money in your savings account versus your checking account. It's yours, but it's not available for immediate use to pay bills. Registered silver is what's in the checking account. It's ready to go. It can be delivered immediately to satisfy contract obligations. So when registered silver drops by 2.57 million ounces in one day, that's 514 COMEX contracts worth of deliverable silver that just left the system. And we're heading into March, which is one of the biggest delivery months for silver. Now here's where it gets really interesting. Let me show you what's been happening to COMEX registered silver over time, because this one day isn't an isolated event. It's part of a trend. Back in 2020, COMEX registered silver peaked at around 400 million ounces. That was during the pandemic when everyone was stockpiling everything. Since then, it's been on a downward trend. By 2023, it was around 250 million ounces. By 2024, it dropped to around 150 million ounces. And now, as of January 16th, 2026, we're at 120.6 million ounces. That's a 70% decline from the peak in just 6 years. But here's what mainstream media isn't telling you. The open interest in COMEX silver futures, that's the total number of active contracts, has been growing. More contracts, less available silver. You see the problem? As of the latest data, there are roughly 180,000 active silver futures contracts on the COMEX. Each contract represents 5,000 ounces. That's 900 million ounces of silver in paper contracts. But there's only 120 million ounces of registered silver actually available for delivery. That's a ratio of 7.5 to 1. For every ounce of actual deliverable silver, there are 7.5 ounces in paper claims against it. Now, most of those contracts will never stand for delivery. Most traders will just close out their positions or roll them forward. But what happens if even 10% of contract holders decide they want physical metal? That's 90 million ounces of demand against 120 million ounces of supply. What if 20% want delivery? That's 180 million ounces of demand. The system breaks. And here's the thing. The people withdrawing silver from COMEX right now, they know this. JP Morgan knows this. Asahi knows this. CNT knows this. These aren't amateur investors panic selling. These are sophisticated institutions with teams of analysts who understand exactly what's happening in the silver market. So why are they pulling their silver out? What do they know that we don't? Let me tell you about the forces driving this, because it's not just about COMEX. It's about global supply and demand dynamics that are creating the perfect storm for a silver shortage. First, industrial demand for silver is exploding. And I mean exploding. Silver isn't just a precious metal for jewelry and coins anymore, it's a critical industrial commodity. Solar panels. The world is installing solar capacity at record rates. China alone installed over 200 gigawatts of solar in 2023. The US is ramping up domestic solar production thanks to the Inflation Reduction Act. Europe is pushing green energy to reduce dependence on Russian gas. Every single one of those solar panels needs silver. And as solar efficiency improves, panels actually use more silver, not less, because they need better conductivity. Electric vehicles. Every EV uses significantly more silver than a traditional car. The electrical contacts, the charging systems, the battery management systems all require silver because of its superior conductivity. Global EV sales are projected to hit 20 million units by 2026. That's 20 million vehicles all demanding silver. 5G infrastructure. Every 5G tower, every small cell installation, every piece of upgraded telecommunications equipment uses silver. As countries roll out 5G networks, that's creating sustained industrial demand. Medical applications. Silver has antimicrobial properties. It's used in wound dressings, medical devices, hospital equipment. As healthcare spending increases globally, silver demand for medical applications keeps growing. Now, here's the problem. Mine production of silver can't keep up. Global silver mine production has been essentially flat for the last 5 years, hovering around 850 million to 900 million ounces per year. And a huge percentage of silver isn't even mined for silver. It's a byproduct of mining other metals like copper, lead, and zinc. So when those metal prices are low, mines produce less, and silver production falls as a byproduct. Meanwhile, demand is running at over 1 billion ounces per year. That's a structural deficit. Every year, we're consuming more silver than we're mining. The gap is being filled by above-ground stocks, recycling, and existing inventories. But inventories don't last forever, and we're seeing them drain, not just at COMEX, everywhere. The London Bullion Market Association, the LBMA, which is basically the COMEX of Europe, they've seen their silver inventories drop significantly over the last 2 years. The Shanghai Futures Exchange, inventories down. The major ETFs that hold physical silver, like SLV, they've seen redemptions. And then there's India and China, two of the largest consumers of physical silver in the world. India has a cultural affinity for precious metals. Silver is used in religious ceremonies, weddings, and as a store of wealth. When silver prices dip, Indian buyers flood the market. When prices rise, they buy even more because they see it as an investment. India imported over 7,500 tons of silver in 2023. That's about 240 million ounces. And 2024 numbers suggest they imported even more. China is the world's largest producer of solar panels, and they're also installing massive amounts of solar domestically. Chinese industrial demand for silver is enormous. Plus, Chinese investors are increasingly buying physical silver as a hedge against economic uncertainty. When you combine industrial and investment demand from China, we're talking about hundreds of millions of ounces per year. So you've got falling inventories, rising industrial demand, strong investment demand from Asia, and now major institutions are pulling silver out of COMEX vaults. This is the setup for a supply shock. And the silver market is tiny compared to other markets. The entire global silver market is worth maybe $40 to $50 billion at current prices. Gold is measured in the trillions. The bond market is measured in the hundreds of trillions. So when big money moves into silver, even a relatively small amount of capital can move prices dramatically. If a major investment fund decides to allocate just 1% of its portfolio to physical silver, that could absorb months of global production. If sovereign wealth funds start viewing silver as a strategic resource, which some analysts think is already happening, the available supply could evaporate. Now let's talk about JP Morgan specifically, because their behavior in the silver market is fascinating and controversial. JP Morgan has been accumulating physical silver for over a decade. After they were fined for manipulating the silver market back in 2020, they didn't stop participating in silver. They just changed their strategy. Instead of shorting paper silver to suppress prices, which is what they were accused of doing, they started accumulating physical metal. Reports suggest JP Morgan has accumulated somewhere between 600 million and 1 billion ounces of physical silver over the last 10 years. That's more than half of annual global mine production, accumulated by a single institution. Now, I can't verify those exact numbers because JP Morgan doesn't publicly disclose their silver holdings, but we can see their COMEX vault positions. And as of January 16th, they still hold over 163 million ounces in their eligible category. They're one of the largest COMEX depositories. So when JP Morgan withdraws 1.3 million ounces in a single day and moves 82,000 ounces out of registered, that's a signal. JP Morgan doesn't make moves like this randomly. They have information. They have analysts. They have trading desks that see order flow across global markets. If JP Morgan is pulling silver, they believe it's more valuable outside the COMEX system than inside it. Maybe they're delivering it to clients. Maybe they're moving it to London, where there's huge demand from India and China. Maybe they're just securing their inventory ahead of what they think could be a squeeze. Whatever the reason, when the biggest player in the silver market makes a move, you pay attention. Let me tell you what could happen next, because we're heading into a critical period. March is a major delivery month for COMEX silver contracts. Historically, March and May are when the most contracts stand for delivery. Investors who bought contracts months ago with the intention of taking physical delivery, they're going to start issuing delivery notices. The COMEX has to satisfy those deliveries with registered silver. But registered silver just dropped by 2.57 million ounces. If delivery demand is high, the COMEX could face a problem. Now, they have mechanisms to deal with this. They can move silver from eligible to registered if the owners agree. They can settle contracts in cash if both parties agree. They can adjust position limits, but all of these solutions have limits. If enough contract holders demand physical delivery and refuse cash settlement, the COMEX has to produce the metal. And if they can't, that's when things get ugly. That's when you get delivery failures. That's when confidence in the paper market breaks down. That's when prices can spike violently. We've seen this movie before in other commodities. Remember nickel on the London Metal Exchange in 2022? Prices went from around $25,000 per ton to over $100,000 per ton in a matter of days because of a short squeeze. The exchange had to halt trading and cancel trades. It was chaos. Now, silver isn't nickel, and COMEX isn't the LME, but the dynamics are similar. When you have a mismatch between paper claims and physical supply, and people start demanding the physical, prices can go parabolic. What's the fair price for silver? That's a question I get asked all the time. And honestly, there's no simple answer because silver is both a monetary metal and an industrial commodity. Right now, silver is trading around $30 per ounce. That's up from the lows of around $12 during the pandemic crash in 2020, but it's still below the all-time high of nearly $50 that we saw in 2011. If you look at the gold to silver ratio, which is how many ounces of silver it takes to buy 1 ounce of gold, we're currently sitting around 80 to 1. Historically, the average ratio over the last century has been around 60 to 1. During times of financial stress, that ratio is compressed to 30 to 1 or even lower. If gold is at $2,600 per ounce, and the ratio went back to the historical average of 60 to 1, that puts silver at around $43 per ounce. If the ratio compressed to 40 to 1, which we've seen during precious metals bull markets, that's $65 per ounce. But those are just ratios based on gold. What about silver's industrial value? Copper, which is also an industrial metal with electrical conductivity properties, trades around $4 per pound. Silver is roughly 17 times more conductive than copper. If you adjusted for conductivity, scarcity, and industrial applications, some analysts argue silver should be trading at multiples of its current price. And then there's the monetary aspect. Central banks are buying gold at record rates. They've added over 1,000 tons of gold to reserves in recent years. But what happens when gold becomes too expensive for smaller investors, and they turn to silver as the poor man's gold? We saw that in 2020 and 2021 when retail investors piled into silver, driving prices from $18 to nearly $30 in a matter of months. If we get a real supply crunch, if industrial demand keeps growing, if investment demand picks up, if COMEX faces delivery stress, we could see silver at $50, $60 or higher. Some of the more bullish analysts think we could see triple digits if everything aligns. Now, I'm not making a price prediction here. I'm just walking through scenarios based on supply and demand fundamentals. The market will ultimately decide the price. But what I can tell you is that the setup is there for a significant move higher. Let me bring this back to what happened on January 16th, because that's the catalyst that could accelerate everything I just described. 4.2 million ounces withdrawn in one day. That's not normal. That's not random. That's coordinated action by major institutions who have access to information and analysis that most retail investors don't. They're seeing something. Maybe it's the March delivery data, and they want to secure metal before the squeeze. Maybe they're getting orders from clients in Asia who are desperate for physical silver. Maybe they're repositioning ahead of a price move they think is coming. Whatever it is, they're voting with their actions. And in markets, actions speak louder than words. When you see this kind of movement, you have to ask yourself, am I positioned correctly? Do I understand what's happening? And what does this mean for my wealth? Because here's the thing about silver, it's not just an investment, it's real money. It's been used as money for thousands of years. It's in the US Constitution as legal tender. It's a store of value that doesn't depend on a government or a central bank promise. If we're entering a period of currency instability, if inflation comes back, if there's a financial crisis, physical silver is one of the few assets that can't be printed, can't be digitized away, and can't default. The 4 million ounces that left COMEX vaults on January 16th, those aren't just numbers on a spreadsheet. That's real metal that someone wanted badly enough to pay for storage, insurance, and transportation to get it out of the exchange system. That tells you something about their confidence in holding paper claims versus physical metal. And registered silver dropping to 120 million ounces. That's a critically low level. We're approaching levels that we haven't seen since the early 2000s. Back then, silver was trading at $5 to $7 per ounce, and there wasn't nearly as much industrial demand. Now we're at $30 with exploding industrial demand, and inventories are even lower on an inflation-adjusted basis. The pressure is building, and March delivery is the potential catalyst. Here's what I'm watching going forward. I'm watching the daily COMEX depository reports to see if withdrawals continue. One big day could be an anomaly, but if we see sustained withdrawals over the next few weeks, that confirms a trend. I'm watching the open interest in March silver contracts. If open interest stays high as we approach first notice day, that means people are positioning for delivery. That's when the COMEX will face real stress. I'm watching the spread between spot silver and futures prices. If the spread widens, that's a sign of supply tightness. People are willing to pay a premium for immediate delivery versus waiting for a future contract. I'm watching silver ETF flows. If we see money flooding into funds like SLV, that's retail and institutional investment demand picking up. Those funds have to buy physical silver to back their shares, which puts more pressure on available supply. I'm watching the Shanghai premium. That's the difference between silver prices in China versus London or New York. If Chinese buyers are paying a premium, that tells you physical metal is flowing east and supplies are tight in Western markets. And I'm watching price action. If silver breaks above $35 and holds, that's a technical signal that could attract momentum traders and trigger a broader rally. All of these pieces are connected. The COMEX withdrawal is one data point. But when you combine it with everything else happening in the silver market, it paints a picture of a market under stress. Now, I want to be clear about something. I'm not here to tell you to run out and buy silver. I'm not a financial advisor. I can't give you personal financial advice. What I can do is present you with data, analysis, and context so you can make your own informed decisions. But what I will say is this: pay attention. The silver market is small, it's volatile, and it's prone to explosive moves when supply and demand get out of balance. And right now, we're seeing signs that the balance is shifting. Whether you own silver or not, whether you're a precious metals investor or you've never thought about commodities, this matters. Because silver is used in so many industrial applications. If prices spike, that affects the cost of solar panels, electric vehicles, electronics, and infrastructure. That feeds into inflation. That affects the broader economy. And if the COMEX, which is supposed to be the ultimate price discovery mechanism for silver, faces a delivery crisis, that calls into question the integrity of the entire futures market system. It raises questions about whether paper markets accurately reflect physical reality. And those are big, systemic questions with implications far beyond just silver. The 4.2 million ounces that vanished on January 16th, that's your early warning signal. That's the smoke before the fire. Whether it turns into a 5-alarm blaze or just dissipates, we'll find out in the coming weeks. But one thing is certain. The institutions pulling their silver out of COMEX vaults, they're not doing it because they think prices are going down. They're not doing it because they're confident in the system's ability to deliver physical metal. They're doing it because they want control of their silver. They want it in their possession. And that tells you everything you need to know about their confidence in the market right now. So keep your eyes on this. Watch the data. Watch the March delivery. Watch what happens to registered silver levels. Because if this is the beginning of a bank run on the COMEX, we're witnessing history in real time. And history shows us that when confidence breaks in a market, things can unravel fast. Thank you for watching The Hidden Economy. If you found this analysis valuable, hit that like button, subscribe if you haven't already, and turn on notifications so you don't miss our next deep dive. Leave a comment below and let me know what you think about this COMEX situation. Do you think we're heading for a silver squeeze? Are you watching the March delivery? Let's discuss. And remember, knowledge is power, but only if you use it. Stay informed, stay ahead, and I'll see you in the next video.